throughout my career to understand this stuff, especially non-dollar denominated bonds when I was a stockbroker at Shearson in 1987. Had I not stumbled or was guided, whichever way it was, it doesn't matter. If I had never come across that, I would not know what I know today. That one teeny piece. Plus, being a banker and a stockbroker, you understand the language, so they can't talk circles around you, which is basically what they do. And then when they do that, everybody goes, oh, well, I don't understand that. They must be so smart, right?
And so right now we're seeing, the Japanese government bonds, the interest rates on those longer-term government bonds look like, well, they're almost normal compared to other countries around the world. So that's a big concern, I think, for central bankers who see that as a big tangible change in world financing. And they don't know what to think of that. And the problem is, of course, is that central banks, particularly the Fed, has tried to grab a hold and control of every aspect of financing in the U.S. economy and therefore the world economy. And the problem with that, instead of a central bank just trying to control one thing like short-term interest rates on Wall Street, now the Fed is trying to control everything. And just like in socialism, when the government is trying to control everything, it doesn't know anything because it doesn't know the real price of anything. And one of the consequences of that, of course, is that, whoops, the price of gold and silver have exploded.
Well, what do what do you make of that? Why have the spot prices of gold and silver exploded when, we keep being told that the economy is strong and that everything is fine here?
Well, it's a big anomaly. Usually when gold and silver prices are rising rapidly, you don't see stock prices holding up or even reaching all-time highs. So right now we're in an anomaly, and we're looking, of course, everybody, including the central bankers, are worried about how this is all going to turn out. President Trump is, in a full court press trying to make sure that Wall Street is getting all of the right signals from him in order to keep stock prices elevated. But, the basic fact is that, even the central bankers don't trust each other. And don't trust other central banks and other treasuries around the world to do the right thing. And so, the old system of fiat money and unfixed exchange rates and all of this post Bretton Woods 1971 system, it's been entirely based on trust. And right now, governments around the world do not trust one another, and central banks no longer trust one another. And, they see that people are spending, people are borrowing. When I say people, I mean other governments. And they're expanding their national debts, and nobody's showing any tendency of curtailing spending, curtailing borrowing. It's just full speed ahead. And in that kind of environment where the future is one of, more inflation of the money supply and bigger government national debts, it's just more printing ahead and probably higher taxes ahead and lower productivity in the economies, less capital investments. It seems like, and I've mentioned this on my own podcast, that it seems like we've now transitioned away from a 40-year period of lower and lower long-term interest rates into a new uptrend where long-term interest rates may be moving up on a trend line ever higher into the future for a long time to come. And, that means it's going to be much more difficult for households, to finance home purchases, to start families. It's going to make it difficult for small businesses to find the capital investment to start new businesses, and even for corporations and larger scale businesses to expand, whether they're a restaurant chain or a mining operation or a distribution type company. It's going to be more difficult if interest rates on long-term borrowing go up. And so that means that it's going to be more difficult for the economy to expand and to increase its productivity and efficiency. And so you have these negatives coming into play, and you have the less opportunity for positives to come into play. And then, of course, the whole question mark about, how much is this artificial intelligence really going to be able to do for the economy moving forward? So, that's the outlook longer term in the economy right now. And, that plays directly into the hands of the precious metal prices, basically gold and silver. If you have a lot of uncertainty, a lot of question marks, and a lot of clear negative marks going into the direction of our future, then going back to money, real money, gold and silver, where the uncertainty level of holding it is incredibly low, it's not very surprising that people are looking for more certainty when they're faced with an era of greater uncertainty. And that doesn't, of course, even account for the heightened level of global conflict that we're experiencing around the world.
Modern central banking has expanded far beyond managing short-term interest rates. Institutions like the Federal Reserve now attempt to influence bonds, equities, currencies, and even market psychology itself. The problem is simple. When a single authority tries to manage everything, it loses accurate price signals. Real values become distorted. History shows this outcome repeatedly, whether in centrally planned economies or heavily manipulated markets. Prices stop reflecting reality. This loss of clarity breeds instability, and one of the clearest symptoms has been the explosive rise in gold and silver prices, flashing warning signs the system can no longer ignore.
Well, it's all of them are based on debt. And, I could certainly be wrong because, as you know, timing is the biggest challenge for any technician. We can tell you what is most likely to happen based on a lot of history, but exactly the moment when it will happen, that's really just anybody's guess. But I think, when I'm looking at what's happening on the spot markets and considering the fact that, what it costs like virtually nothing to control 5,000 ounces of gold, or 500 ounces of gold, 5,000 ounces of silver. And so the price has been very easy to suppress. Personally, I see a movement that started last January because it's been those paper contract markets, those spot markets that have been dictating the global price, but that seems to be shifting. Are you also seeing that shift more toward a true, why isn't spot gold still at I came into the industry, it was $248 an ounce. Why isn't it still there at those lower levels? Rather, you're seeing both spot gold and silver make new highs. Is it possible that Wall Street and Washington are losing control of the narrative? We don't really hear too much about how the little guy is buying gold and silver, except that Walmart, Costco, and Amazon are selling gold and silver. And they're probably not really, most of their clientele are probably not the Rockefellers. Okay? So I think that's really I think that is very telling as well. You talked about a grassroots movement. What do the spot prices tell you along with that information?
Well, on the eve of silver going above $50 an ounce, I described the situation as that we were going to experience growing pains because breaking through that $50 level was going to send a signal to the next layer of potential investors that, hey, something has changed here. And, as that information got out to additional new stackers, to traders and hedge funds, to Wall Street, to investors, as that information permeated outward. And I'm just now still getting back feedback on this from friends and family and poker partners and, just people that I know. They bring up the topic of the price of silver. So what we've seen in the marketplace is these growing pains in a major way. We've seen the wholesale markets be very, very turbulent. There's been backwardation of the futures versus the spot price.
Right.
We've seen, runs on coin shops. We've seen, silver backing up through the distribution chain where, the little guys are exchanging their silver for currency, and it's going to refiners who are also backed up with stuff to melt down because they want to produce these big silver bars for the wholesale industry. So there's a reflux action in the marketplace. And of course, these types of changes, I can't even remember them all. It hasn't been that long since silver was, turned $50 an ounce. But, if you went through the daily news cycle, you'd see all sorts of new abrupt changes in the marketplace. It's been occurring at a dizzying pace. So when I described it as growing pains, that's an underestimate of what's actually happened. And of course, the price of silver has accelerated. Now it's over $100 an ounce, and quite naturally, I think silver stackers are kind of giddy and happy.
They cheer.
And more power to everyone. Celebrate, but just remember that $100 silver is a sign, just like a $5,000 ounce of gold is a sign of bad things to come. Okay, right. Higher inflation, economic crisis, and potentially even war and international conflict. So our work is not over here. We have to expand this knowledge out to many, many more people, and we have to get ready, be better prepared for economic bad times to come, and they may be coming a little quicker now than we anticipated. And we also have to get this knowledge about what's causing this problem, because if we don't change the system, eventually, all the silver you stack, great for you, but it's going to mean that we're undermining the entire existence of human civilization. So we have to have an ideological revolution attached to our preparations for economic downturn in the economy and difficult times ahead. But we have to show some ideological commitment to changing the policy in the right direction that we've been talking about here today.
Traditionally, surging precious metal prices coincide with falling stock markets and economic stress. Today, we see something unusual: gold and silver climbing sharply while equities hover near record highs. This contradiction reveals deep uncertainty beneath the surface. Governments project confidence, but investors are hedging against something darker. Trust, once the foundation of fiat currencies, has eroded. Central banks distrust each other. Governments expand debt without restraint. In such an environment, precious metals no longer act as speculative assets, but as financial lifeboats. They rise not from optimism, but from growing doubt about the system's durability.
Yeah, that is such a good point. And when you talk about the ideology, I mean, if anybody actually bothered to read all of the documents which are available, I have no access to anything that anybody else does not have access to. Neither, well, you might have, but I know I don't. But you can, if you read, like when they were first putting in the system back in 1910, they said if people have to work harder and more to maintain their current standard of living, they'll have less time to pay attention to what we're doing. Voila, inflation was built into the system to keep them at the head. But prior to going off the gold standard, and actually let's call it what it is, prior to the confiscation of gold, the fifth confiscation of gold in this United States in 1971, a lot of the talk was, well, if we bring women into the workplace, not only do they generate additional taxes, but they're going to have to leave the home. And the home was the heart of the family. And look, my mother worked my whole life. I've worked my whole life, right? So I believe in choice. But my point in this is that empathy for others has drastically declined, because to me, I see this as a strategy of divide and conquer. If we are not having conversations, then all we're really doing is listening to the garbage and the lies that they're feeding us, and we're just puppets, right? So to your point, and I agree with this 100%, that's why it's not just sound money, but it's also community. It's bringing people together. Even if we disagree, we have to have these conversations. Because I personally have found in my lifetime that it can be my worst enemy saying something to me and trying to really hurt me, but there might be just one teeny weeny grain of truth in there that I think what I try and do for people is try and get them to look at things just a teeny weeny bit differently, right? Just a little bit differently. Because as soon as you do that, it's amazing what you can see. I'm telling you, that purchasing power chart from the Fed is probably my very favorite chart of all time. I can't even count how many thousands of times I've probably looked at it over all these years. Yet, depending upon what I'm looking for when I go in there, I'm still discovering things I didn't see before. And I think that that's really what our work is all about, is helping people have a paradigm shift. This is a dime card that we came out with, and on one side, this side is a pre-65 dime that was in circulation prior to taking the silver out of the system. And I don't know, I think that's about maybe $5 or $6 right now, that our cost on it, versus a regular dime. So I realized one day when I lift weights, and I was talking to my trainer, who is an attorney turned gym rat, right? So he's a bright guy. I've been seeing him for many years. We have lots of conversations about all sorts of things. And one day he said, I don't even know how we started talking about silver as our money. And he goes, and he was a history buff. That was his undergraduate degree. And he said, there was silver in our coins? And I went, you didn't know that? He goes, no. And he's about in his mid-40s, right? And my children are also in their mid-40s. And what I realized, which didn't occur to me, because I talk about sound money all the time, and that sound money is above the government's and central banks' ability to inflate away because it has the broadest base of demand, and that's bigger than governments and central banks. So that's why we came up with the dime card, because if people have never held sound money in their hand, and we're asking them to advocate for sound money, we better put it in their hands.
After 40 years of declining long-term interest rates, the trend appears to be reversing. Higher borrowing costs affect everyone, from families buying homes to entrepreneurs starting businesses. Capital becomes scarcer, expansion slows, productivity suffers. This environment discourages investment and innovation, replacing growth with caution. Even technological optimism, including promises around artificial intelligence, may struggle to overcome the drag of rising debt and tighter credit. The economic outlook becomes heavier, more constrained, and less dynamic. Historically, such periods favor real assets, especially gold and silver, over financial promises dependent on endless borrowing.
Oh, I agree 1,000% with that.
Absolutely.
It's always been, a big kind of hobby of mine. It's also, what I do professionally is, the mission of the Mises Institute is to try to improve our understanding of free markets and sound money, and to teach people how they work in the real world. But you have to admit the fact that people have little to no idea of what free markets are, what they really are, or what sound money really is. Now, as discouraging as that is, I must say that I'm very optimistic about the future in the sense that people are becoming disgruntled about the current system, and they're much more open-minded now than they were just a few years ago.
Yes.
And they're really trying to work out in their own minds these conundrums about why Americans are at each other's throat, about why the stock market is doing so great, and yet people around the neighborhood are doing so poorly.
Yeah.
And so I think that really makes our efforts continually more and more important. But the reason I'm optimistic is because people are increasingly more open-minded to these new ideas, and they're increasingly not trusting their overlords in Washington, D.C., and they're suspicious of the political elites that ultimately control, these small number of corporations and these political parties and the media. So, moving forward, I think we have a huge job to do, but the fact that there's a receptive audience out there really energizes me about the future.
Silver's rise tells a story beyond price charts. As it broke key psychological levels, new participants entered the market, small investors, hedge funds, and everyday buyers alike. Physical shortages emerged. Coin shops saw surges in demand. Futures markets showed stress, with backwardation signaling immediate supply pressure. Even major retailers began selling precious metals, hinting at broader public awareness. This wasn't driven by elites alone, it was grassroots. When ordinary people start discussing silver at family gatherings, something fundamental has shifted. Markets were no longer being moved solely by paper contracts, but by real physical demand.
Well, I couldn't agree with that more, and it's been really interesting. I recently did the Nomad Capitalist event, and most of my presentation was on the purchasing power chart. And I can't even tell you how many people came up to me afterwards and said, we knew something didn't feel right, but we didn't understand what it was, and this clarified it. So, really to your point, when you're looking at headlines, as Americans pinch pennies, goodwill seems resurgent. You're right. And it's the younger people that will create the revolution. You and I, we're the teachers. We've lived long enough. I was born in 1954. I can't even tell you how grateful I am that I was put in the position throughout my career to understand this stuff, especially non-dollar denominated bonds, when I was a stockbroker at Shearson in 1987. Had I not stumbled or was guided, whichever way it was, it doesn't matter. If I had never come across that, I would not know what I know today. That one teeny piece. Plus, being a banker and a stockbroker, you understand the language, so they can't talk circles around you, which is basically what they do. And then when they do that, everybody goes, oh, well, I don't understand that. They must be so smart, right?
Soaring gold and silver prices are not victories. They are warnings. They signal inflation, instability, and potential conflict ahead. Preparing financially is important, but insufficient on its own. What's required is a broader awakening, an understanding of sound money, free markets, and the systems shaping daily life. Many people sense something is wrong, but lack the framework to explain it. Education creates that clarity. Holding real money, having real conversations, and rebuilding trust at the community level matter. Change doesn't begin in central banks. It begins when people see the system differently and demand something better.